Good afternoon, everyone. Good afternoon, VV Nation. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Welcome to our YouTube live stream, Trending Thursdays. We're not only live here on the live stream, but we do have a podcast. So for any of you who will be listening by way of podcast, welcome to you as well. For those of you new, you can take the chat away. For those of you who are new, what do we do here? Trending Thursday. We look at stocks that are making news in the market, and then we turn around and use the power of the VectorVest software to see if those are good stocks to get into or not. Just because they make the news doesn't always mean that they're good stocks to get into. Some of them may be stocks you want to stay away from. So we look at the stocks making the news, we go through, we analyze the stocks using the VectorVest software. If there's anybody here that does not have the VectorVest software, Joey's going to put a link in the room for you where you can take a trial to the VectorVest software for 99 cents for 30 days. VV Nation, to all of the people who are thinking about it, tell them about the software. Tell them what you think about the software. So you're not just hearing it from me, you're hearing from the people that are in the chat, the people who are part of the VV Nation and use the software. Listen to them. All right, that goes for the people who are maybe contemplating getting on board with the software. All right, don't forget, folks, to comment, like, and subscribe. Please subscribe to the channel. This channel has really grown tremendously, and that's because of you folks out there. So I am still kindly asking, let's keep the momentum going. Please subscribe to the channel. You know what I want you guys to do today? I want you to post this link to what we're doing right now to your social media. There may be people in your social media who may be interested in the market and don't know where to start. Post this link to this webcast or this live stream that we're doing right now. Post it on your social media. Give people the opportunity to click on it and maybe join us today. How about that? So if you can all do that for me, it'd be greatly appreciated. Let's grow this channel. We're pushing 16,000 subscribers, Joey, thereabouts. Man, when we started this about a year ago, where were we at? Do you remember?
A year ago, I think we were 75.
About a year ago, we were about 7,500 subscribers. Look at what a year does. And that just goes to show that the content that we're putting out on this channel, you guys like it. And we're still getting ready to work on a second live stream, which will be done on Wednesdays. I've been talking about it, but it'll get off the ground. We're still trying to get it off the ground. And it will be a new character, a new person that we're going to promote in that webcast or that live stream. So, again, thank you all for being here. What do we always start off with? We always start off with what's going on in the market. Even though we look at stocks that are making news, it all stems around market timing. And as a company, VectorVest is really good about being able to time the market. For those of you who may be new, timing the market for us doesn't mean that we predict where the market is going to go. What we're looking to do is follow the trend of the market and keep our subscribers on the right side of the trend. How does that work? Well, no matter how you invest in the market, whether you're a conservative, retirement-minded individual, whether you're looking to swing trade, get in and out of a stock in a couple of days to a couple of weeks, or if you're day trading, we have a market timing signal that'll help to get you as an individual investor in and out of the market at the right time. We've got 7 different market timing calls to accommodate every type of investor there is in the market. So it all starts with market timing, and what we're going to do now is we're going to start to take a look at the home page of the VectorVest software. This is where the market timing perspective starts. So on this home page, the first thing we look at is, what are the major indices doing today? Well, they were down and then they went back up. Right now, all of the major indices are up. We are looking at VectorVest real time, so we're getting tick by tick real time information on everything you see here. The Dow is up about 0.1%. The NASDAQ is leading the way, up about 0.25%. The S&P as a whole is up about another 0.25%, and the VectorVest composite is up about 0.1% as well. What is the VectorVest composite? Well, the VectorVest composite is an indexed arithmetic average of all of the stocks that we track. Currently in our database, we track 8,217 stocks. Well, why is that important? Well, when you look at the Dow, and the Dow is up today, it only tracks 30 stocks, but we say the Dow is up. The NASDAQ tracks about 4,300 stocks, but it's very tech heavy. So big stocks like Apple and Google and Netflix can really move the NASDAQ if they have a big up or down day. But it's about 4,300 stocks, but it's very tech weighted. The S&P 5 and 100 both track 5 and 100 stocks respectively. So look at all of that. The VectorVest composite tracks the movement of 8,217 stocks. We feel that it is a better representation of broad market movement, and that's why we use that indicator, the VVC, for market timing. All right, so all of the major indices to include our VVC are up today. Let's move over to our market timing gauge. This is one of the traffic lights that we have into the market. Right now, with the real-time data, we're smack dab in the middle of the yellow. VectorVest, though, does not advocate buying any stocks at this time. So if you're a little bit more of a prudent investor, here's the guidance that you have right now. We're telling you that it's not a good time to buy any new positions. Let the market come to you. Don't force the trade. Now, on a nightly basis, we look at the market timing gauge. But if you want a bigger view, how about the last 6 trading days of 3 different indicators that we use for timing the market? One is the price, which is that VVC. The next is the RT, or relative timing of the market. It tells us the short-term price trend of the market. And the BSR, or buy to sell ratio, gives us the overall health of the market. Now, these indicators are tracked on both a week-over-week and day-over-day basis, and that's how they get their colors. The yellow means that there was mixed data on these points. Let me explain. So today, the price of the composite closed at 46, or right now is at 45.96. It is lower than it was a week ago at 46.77, but it is higher than it was yesterday at 45.90. So the price of the composite is lower on a week-over-week basis, but higher on a day-over-day basis. So we assign a yellow tile. And we do that for all 3 indicators. If it's yellow, that means the data is mixed. It's either risen on a week-over-week or day-over-day basis, or fallen on a week-over-week or day-over-day basis, so the data is mixed. When you've got a lot of yellow lights, when you get to a traffic light that's yellow, what do? In New York, we speed up. I know Jay is probably here, so Jay probably speeds up. I'm from New York as well. But in general, when you get to a yellow light, what do? Slow down. So when I'm looking at this color guard over the last 6 trading days, it's telling me as a subscriber to the software, this is a time to tighten the stops on the stocks that I own, whether I'm bullish or I'm bearish, all right? So a lot of market timing information is found right here on this homepage. And folks, we haven't even gotten into the software. So being able to think about taking out a trial, 99 cents for 30 days, may be very well worth it, especially if you are not a subscriber to the software yet. All right, so that's just the feel of what's going on in the market right from the homepage. Joey wanted me to do a little something different today. Let's go into the views. This is our nightly newsletter. Which one of these, Joey? Is this one?
Yeah.
This is our nightly newsletter that we use every night to keep you on top of what's going on. You will see a larger version of that color guard shown here, and it's a beautiful way to show a transition of market move, going from more bullish to a lot more neutral and staying a lot more neutral. This is a beautiful visual way of helping you to manage the positions in your portfolio. But every night we give you the strategy section. Concerns on the, and this was as of last night's data, okay? Concerns on the overall impact of the coronavirus will have on the economy cause Wall Street to close sharply lower today. That was yesterday's data. With one red light and a down-up situation, we tell you if you're a prudent investor, you should not buy stocks at this time. And if you're more of an aggressive trader, you should play the market as it develops, but with more of a bias to the downside. We do this for you every single night. We also provide you with some searches to take a look at from our Derby. I won't get into that here, but we give you what's working the best in the current market's condition. Folks, for 99 cents, you get all of this and more. Just think about that. You get all of this guidance and more. All right, let's go back to the homepage. Now that we've got a feel of what's going on in the market, all right, we know where the market stands. We know the guidance that the VectorVest software has now given us. What do? Well, let's find out why the market is in this area of being more neutral than anything. News is what's driving the market. So let's go into our first news, and I always cover the market first. The Fed's corporate bond buying is stoking bubble fears. The Federal Reserve said last week it would start buying individual corporate bonds in addition to ETFs. I want you to keep something in mind. The Fed said that they would never do this as a means of trying to buoy the economy. But because of the coronavirus, the economy has taken a big hit. The Fed has opened up everything, all of the tools in their tool belt to help to make sure that our economy does not go into a recession. Such intervention has boosted markets, but also is stoking fears that risk appetite is getting carried away. Companies have issued record-setting amounts of debt during the coronavirus pandemic. And keep in mind, we've been giving a lot of stimulus to small businesses to help keep them afloat throughout the coronavirus. If the Fed persists in flooding the markets with liquidity, what is that? Stimulus. The risk is that the Fed will create the greatest financial bubble of all times. Now keep in mind, folks, this is a story. All right, they're not seeing my story. What did I do? All right, now you see my story. Why didn't you tell me they could see my story? Why are you not producing? Joey, you know what I'm going to do to you? That's for not paying attention. All right. Now, with that being said, now you can see the story. I'm likening this to, just listen to this. If the Fed persists in flooding the market with liquidity, the risk is that the Fed will create the greatest financial bubble of all times. Now, is this all about doom and gloom? No, it's a story, and we're just analyzing the story, but just keep that in mind. At some point in time with flooding the market with money, what happens? Well, we're going to eventually find out, won't we? Interest rates are still low. Another story on another side. So that was from one perspective. Another perspective, Evans says low inflation may require more monetary easing. So this is a different person, not the Fed chief, but a Fed president. The Chicago Fed president is saying that we need more monetary easing. So one story is saying, man, we got to stop putting so much money in the market. And another Fed president says, yeah, we need more monetary easing. Let's scroll down a little bit. The U.S. economy may require more monetary stimulus, especially with inflation so low and at the risk of further weakness. In a speech delivered virtually to a luncheon sponsored by the Corridor Business Journal, a newspaper in Cedar Rapids, Iowa, Evans sounded more worried about the outlook for inflation than some of his colleagues. Thus, one of his other colleagues is the Fed chairman. Has moved down significantly with risks tilted towards further weakness. I think we're going to get to a point before too long where we have to look at our inflation objectives and how the economy is going to make a judgment as to where the additional monetary policy support will be needed. Two different stories on whether or not we have too much money in the market or in the economy or not enough. All right. Now, there's one more story. Another Fed story. Fed said it could supply the economy with $2.3 trillion. It hasn't come close so far. Well, how about this? And the Fed in March unveiled lending programs that said they could provide $2.3 trillion on the economy. So far, it has totaled $143 billion, or 8.2% of the total firepower. So when I sit back and say that the Fed is using everything in their arsenal, this goes to show me that they've got more in their arsenal to put out. Now, I'm not sure about that number. I thought the Fed put out $1.7 trillion. That's what I thought. But this says only 143 billion. Things that make you go, There are several likely explanations for why what was supposed to be an infusion of cash into the economy instead has been a comparative trickle. So this is why we look at stories. This is why we look at different stories to get different perspectives on what's truly going on. So stories talking about inflation is right where it needs to be. Maybe we have too much money in the market. Maybe we don't have enough money in the market. So now let's take a look at how all of these things show up where we can actually see what the market is doing. I'm going to put us back into the VectorVest software. From here, we're going to move to the market timing graph. Actually, let's go to my watch list. I'm going to go to my watch list of stocks that we have for this week. We're going to go to the watch list viewer. We're going to go open up the YouTube Trending Thursday. Our watch list for this week is for 6/25, 2020. Here's the stocks that we're looking at today. And right now, we've got 11 stocks. What stocks we always look at for tracking the market. For those of you who are VectorVest subscribers, we look at the VVC. And for those of you who haven't already taken out the trial and you still want to get a feel of what's going on in the market, we also look at the S&P 500 by way of the spiders. All right, so now that I have them both highlighted in my list, I'm going to right click and I'm going to view the stock graph. This is what you're looking at. This is the market. Let's start with the VVC. Remember, it tracks the movement of over 8,200 stocks, right? So as I look at this, this is a simple graph looking at the VectorVest composite shown in candlesticks. We also have a moving average, which is a 20-day exponential moving average. General rule of thumb, if the market is above that moving average, it's okay to be long in the market. But when it's below that moving average, it's a good time to not be long in the market. And the next thing we have on here is support and resistance. I'm always wondering where we are in regards from a ceiling to a floor, and if we're bouncing off a floor, that's more of a bullish move, and if we're retracting from a ceiling, that's more of a bearish move. So as I look at the VVC, and I'm trying to be very descriptive for those people who may be listening by way of podcast. Currently, we do have an open candle today, but the price of the composite is clearly below the 20-day exponential moving average, which now lends credence to the guidance that we gave that it's probably not a good time to buy stocks right now if you're more prudent. All right, this now makes sense. We are in the middle of a channel, but now probably more so towards the bottom third of the channel. The channel is made up of a resistance level on the VVC of 48.40 and a support level of 44.79. We are closer to the level of support. We recently did bounce off support back here on June 12th. We rose, and then yesterday's candle of 624 closed below the 20-day exponential moving average. And today, even though we have a little bit of an open candle, we're still clearly trading below the 20-day exponential moving average. For the purposes of getting back into the market or playing the market to the upside, let's try to see if we can get back above that 20-day exponential moving average on the VVC. Notice that the RT, which looks at the short-term price trend in the market, is trending lower and has been since the most recent high that took place on 6/8 of 2020. Earnings on the VectorVest composite is lower than it was 3 months ago, and earnings is the engine that drives a stock market or the stock market higher. Right now, even looking at the VectorVest composite, let's wait and let the market come to us instead of forcing a trade. Let's take the same look at the S&P 500 or the spiders. Currently, open day today, but the candle is still below the 20-day exponential moving average. Since its most recent high on 6/8, the RT, or relative timing, has been trending lower. Folks, you don't get this kind of information anyplace else where you can see an indicator telling you the market is moving lower before it actually starts doing so. So both indicators, the SPY and the VVC, are saying be very cautious right now. One day doesn't make a trend. The market is slightly up today. One day doesn't make a trend, and that's where we are as far as where the market stands right now. On your parameter, I see there's an option for searches as CI times RT. That is a sort. That is a sort, Leonardo. CI times RT means comfort index multiplied by relative timing. It is finding stocks that have the propensity to go higher, that are more resilient in the market, less apt to be susceptible to long and lengthy price declines, and RT tells me if a stock is in an uptrend or not. It is a great combination of trying to find stocks that are on the move. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.